Welcome back to Trading 360. We're here, you're there. We're glad to kick it off here for the big three today. 3 stocks, 3 charts, 3 trades, and Rick Ducat is ready. He's standing by with the charts, and Aquiles Larrea is here, founder, CEO, Larrea Wealth Management. He's ready with his trades and ideas that he wants to explain to us. So thank you both. We're going to kick it off here with the big three. Before we get to some of the names that you're focusing on today, names people know. I always love when people really can associate with the names. Tell me a little bit about how you're feeling about the market.
Yeah, you know, we're obviously bullish on the market as a whole, but we are seeing what's happening right now. Is the Fed going to increase to 7%? We heard Jamie Dimon saying, hey, I'm afraid of 7%. The world's not ready for that. But right now, we feel as a whole that the Fed's in a holding pattern, and the last thing they want to do is put us into a recession long term. So we want to make sure that we're on top of the situation as we're going along and going more to a flight to quality in the names that we're going to talk about today.
All right, so let's get to Con Edison, which really has been beaten down. It was a $100 stock year to date. It's lower by about 6%. Tell me why you like Con Ed.
Yeah, Con Ed is a really interesting name, especially at this time of year. They just had a huge rate increase during the summer. It was a double-digit increase. I tell my clients, now you're paying them throughout the year. How about getting paid something back from them? Because their dividend yield is over 7.4%. Now, is that sustainable? We don't know at this particular point. But anytime that the stock is close to $90 threshold, we think it's a buy, it's a quality add to the portfolio, and like I said, it's defensive in nature, and we feel that it's a good addition to any quality portfolio.
Wow, okay. Rick Ducat, take a look here at the charts of Con Edison today, please.
Well, we've been trending downward ever since we hit our yearly highs near 101. So since then, we've seen a move downward within a channel type shape here. And we can see that the move downward took us to an important point, a potentially scary point here in the $87 mark. That was about the lows that we established back here. You can see we dipped below that point. We also fell below the lower boundary of our channel here. So that was a moment where it looked like we could break to the downside. However, we managed to climb our way back up here, but we stalled out right here at our purple 252-day exponential moving average, which was also right near our volume profile point of control, the area of heaviest trading during the past year. So right around 92.50 or so is where things started to falter once again here. Now this gives us a more steep downward trend line to watch here, this blue dashed line. You can see we've also given up our 3 exponential moving averages we follow. Price has moved below our yellow 21-day, orange 63-day, purple 252-day moving averages. Today we're heading downward a little bit more as well, a red candle here. And you can see that we are starting to transition from kind of a downward slope to a sideways slope in our moving averages, but our shortest term one, our yellow 21-day, once again starting to trend downward here. So a sign that the trend is worsening a little bit. RSI also supports this. We're seeing a move below the 50 midline in the RSI that separates bearish momentum from bullish momentum, so now we're moving toward the bearish side of things here. However, we've still got this $87 mark to kind of hold on to here. That's our support point to watch. If we start getting too far below that, that might be a sign that really the trend is starting to worsen to the downside here. But for right now, look for the moving averages to provide some resistance. Our nearest one is the 21-day, just above the 90 level.
Yeah, understood. I think, as you talked about that downward trend, and that's a little bit nerve-wracking. The RSI made that turn, Achilles, as Rick pointed out on the charts. Where do you think this is headed? What kind of upside do you see?
We're seeing a very limited upside at this particular point. We're looking at 5 to 8% in the next 18 months.
Okay.
So nothing out of this world. But given the rate increases that they did in the summer and that winter is coming, not to quote Game of Thrones, but winter is coming, and we're going to see increased usage amongst their customers, we see them benefiting from that, and the next few quarters should look pretty good for them.
All right. Next up, one of the Magnificent Seven. Before I get to Microsoft specifically, how do you feel about the Magnificent Seven? Are there some of the names that you would more likely buy than others? Which ones?
I think we're leaning towards Microsoft a lot, but there are several high-quality names there. We think that once a dominator in the industry and part of the new technologies, you definitely want to be aboard with those companies as they can be very fruitful going forward.
All right, so tell us more about Microsoft, which is, it also is off its 366 high, but has certainly been a winner. It's still up about 30%.
Yeah, well, Microsoft, we're looking at the AI technology. We think that that is the future of the company. They're very forward thinking in that sense. They're looking at hiring a nuclear engineer to come in because computing in AI takes a lot of energy. So they're going to need nuclear mini reactors. So they're looking for a gentleman to take over. They had that in the journal the other day. So that's one part of it.
Yeah.
We feel that this is a future component to the company that is going to raise their monies, and at the same time, we're looking about 18 to 22% in 18 months. We think that the double-digit increases are not far off, and we feel that that's actually on the conservative side, Nicole.
Right, all right, so looking for 18 to 20%. Rick, this name has come off of its highs. Your thoughts?
Certainly. Another move down from the highs here, a similar type to our last chart here. We had our yearly highs near 366. We had a test of support after we had the decline here. This time was near about 313, 314 or so. You can see that was our old low close. We established it once again there. Then we rose upward. This time the resistance was in the form of a volume node near about the 335 level. So you can see that these highs give us our downward sloping trend line here. But like our last chart, things have worsened a little bit. We've traveled below our moving averages, our yellow 21-day and orange 63-day. The moving averages themselves are starting to slope downward. The faster moving average is crossing below the slower one. Not the greatest trading signal to operate on itself, but it's a sign of the trend worsening a little bit to the downside. Now today, we're falling farther than the overall market. We're down almost 2% on the day, and we're breaking through that 313.85 level that represented our old worst close here. Now, we can also see RSI, our measure of momentum, making a lower low along with price here. So we are trending lower, but we're away from the oversold area still. We're not quite there yet. So that could be a point that could be really worth noting here, especially if we get down a little bit lower. This other volume node near the 310 level, right about there, if we get to that point and we find some support, that could be a place to look for a bounce here, especially if we kind of dip into that oversold area. That could be a sign that things are getting stretched too thin. And RSI is nuanced. You know, it could be a sign of that things are getting stretched too thin. It could also be a sign of the downtrend accelerating here. So it's really important to see if that happens. If we do break into oversold and break below support at the same time, that could be a bad sign. If that does happen, check out here. The 252-day exponential moving average comes in right around the 300 mark. That could be the place to look for some further support if things continue to worsen. To the upside right here, we've got our moving average confluence right around the 325 level. And I wanted to point out one quick other thing as well. If we zoom in on this chart a little bit here, you can see we had two bearish engulfing candles in a row. We had this one that formed there, the real body, completely encompassing the previous day's real body. You can see we had another one there. Not really a good sign when you have two of those in a row. You know, a more bearish candle pattern, obviously.
Yeah, I see all the down arrows here, and just when it tries to give it a go, it just really, it's not going at this time. But you do feel optimistic. And look, it's a market too that has had this time traditionally is a tougher time of the market, right? August, September, October. Any quick final thought on Microsoft?
Yeah, just real quick, you know, just remember that we're thinking of this stock for the future. We're not thinking of it right now. We're going to face a lot of near-term resistance, but the stock long-term is a winner.
Right, okay, up next, another dividend payer, right? And it was under some scrutiny for a while when they started to bring it down. AT&T, which year to date is down 19%, Achilles. You like this one?
Yeah, you know, I'm looking at this as a turnaround target at this particular point.
Okay.
We don't think it's going to go up tomorrow. We're going to face a little bit more resistance at this point. I would not be surprised if it hits those 13 levels again, and we'll pick up that stock simply because $13.
Well, right. Oh, if it goes down to 13, because right now it's at $14.95.
Correct.
So when it gets in the $13 range, a good time to pick it up.
We'll pick it up now just because it's quality and we want to own it in the portfolio.
Right.
But we see this going easily to the 16 to 20 range in an 18-month time period, simply because there's a lot of compelling reason. You know, we have a lot of people who are in their contracts for the new Apple phones, and if they want to upgrade, they stay there. They're not going anywhere, and they're loyal Apple base.
Right.
So that's one part. The second part is the dividend yield. Now, I had made a mistake before. I said Con Edison was at 7%. They're actually 3.9%. But AT&T is at 7.4%.
Oh, I see. Okay.
And the question is, can they sustain it? You know, at this particular point, that's going to stay there for now.
Understood.
And it may actually go a little bit higher. The next thing that I would recommend is that this particular stock, as a turnaround target, you're going to have anywhere between a 5 to 12% move to the upside, but you're going to have to be patient. This is not something that's going to happen overnight, and if you have patience, you will be rewarded for it.
Right, and look, as you noted, the iPhone 15 could be a catalyst here as people renew their subscriptions for their phone lines. Rick Ducat, take a look at AT&T chart, please.
Trending downward from March to August here, you can see this blue dashed trend line marking the spot where we failed to take out those previous highs from earlier in the year. But since then, we've broken beyond that trend line here. We've been trending upward off those yearly lows near 1343. We're up about 11.5% from that point. But the situation is a little complicated here because we have this upward trend line, but if we try to go across the highs, we get a broadening triangle type trading pattern here, typically regarded as a more difficult pattern to trade because your two targets are continually moving apart from each other. It suggests kind of a lack of clear boundaries, a lack of clear trend here. We are crossing above our yellow 21-day and orange 63-day moving averages today. We're also crossing above the $15 mark. We've slipped below it by about 3 cents right now. So that would be an important area right here because we've got our 63-day EMA lining up right with that $15 mark. So it's giving us a confluence of resistance to watch. The more indicators and trend lines and support and resistance levels line up at the same point, the greater weight that price level has. So this could be an important pivot area to watch as we head into the close today. Momentum is still favoring the bulls, though. We didn't quite make it to the overbought area, but we are above that 50 midline still. That would be concerning if we failed to break above resistance and momentum crossed over that midline here, but that hasn't happened quite yet. So, you know, if you're bullish, you'd want to clear above that 15 level. You'd want to keep going up to the 16 mark. That represents the old highs that we saw from this short trading range here. That red dashed line there also roughly coincides pretty close to the upper boundary of our broadening triangle here. Now, you can see as well, if we were to cross above that point, we've got our 252-day EMA and a volume node just below 17 there, so that could be an interesting target to watch. To the downside, the old lows, that's the real danger point there, 1343. If we break to the downside, there's not really a whole lot to potentially stop us beyond these lows right here. You know, those are two potential areas to watch around 1343.
Yeah, got it. Rick, thank you for all of those great charts today. We do appreciate it. Good luck there at those names. Achilles, your final thoughts here.
Yeah, there's going to be a lot of mess before it gets better. This is the time of year that it tends to happen. You know, a lot of sales are occurring right now. Mutual funds and hedge funds are starting to sell, declare their losses for the year or gains. But we want to make sure that we're in the high quality, so that flight to quality is important at time.
Yeah, Aquiles Larrea, thank you for being here for the Big Three. Of course, our own Rick Ducat on the charts. Aquiles Larrea of Larrea Wealth Management. Some great names to watch there.